Hey guys, welcome back to my channel. So in today's video, I want to give you guys more of a step-by-step on how I find trades and how I enter trades. So I talk about a lot about putting interest in all these different components. So in this video, I kind of wanted to put it together for you guys and talk about one of the trades that I took this week. So if you're in my group chat, you were able to follow along. I did post a lot about it. And I want to show you guys here how I came up with the concept. So first things first, when I did come here onto my screen on TradingView, I did notice the up structure, and normally I do trade at the bottom of the range, right? This is a 30-minute. So I looked at the 1 hour and I still see we were in lots of up structure, okay? So you can say uptrend, I like to say structure. So when I came on the screen, I noticed there was a little bit of consolidation with a dip that went into this imbalance fill. Okay, cool. So yes, normally you want to buy low, but because this was consolidation and then we had a spring out, that's what really caught my attention. Okay, so I'm gonna mark up this point of interest and then do my steps around it. Let me go into replay mode for you guys. I did look at this trade at exactly 9:40-ish. So let me bring the time frame up for you guys, just so you guys literally know exactly what I seen at what time. Oh, sorry, I noticed this at 8:45. Step 1 is to identify trend and structure. So when I first noticed this, like I said, I did look at the trend and the structure. So I'll put that on here real quick for you guys to see. Okay, we had up structure like so. If I jump back to the 1 hour time frame, we have this high, we have this low, and this low, as well as this high. So low, high, low, high. So realistically, I am looking for some type of retracement for us to go back up. Okay, so there was my mindset when it came to the structure here on the charts. So step 2 is find your point of interest. We found this right here. Let me zoom in for you guys. This was my point of interest. When I found this trade, it has already rejected this zone, guys. Okay, so this is the exact time I found the trade. So it came right into this imbalance fill right here. It actually fully respected the 30-minute and took out all this liquidity. Okay, great. And we rejected, we closed above, and we started moving forward. Step 3 is to wait for rejection. So guys, the candle tapped in, closed very high. This one came a little bit lower, closed high, and kept going. So it's really important to realize that we're rejecting. If I would have got this candle closed right here, and then this candle closed right here, well, then the situation is changing. We're most likely going to consolidate here, maybe break through. But I got a rejection. So it's showing me that the banks, as like I like to call it, tapped and go. Came, collected, and left. Okay, pushed down, closed any orders, left, took off. Okay, so this is when I got in, or this is when I was marking up. Yep, 8:30. So my next step is to wait for a break of structure. If you choose to enter off rejection candles, you can do so. But like I said, I got here and it was already like this. So my next move was to wait for a break of structure. Okay, so I went on the lower time frame for this one to the 5-minute. Okay, cool. So if I structure this down, let's structure it down. And you guys, and if you're part of my group chat or anything related to me, you guys know I don't like messy charts, but it's okay to mark it up to see what you have to see. Just delete it when you're making decisions or sending the charts. Okay, so here's my structure down. So I need to break this part right here. Okay, so that is my break of structure. So let's BOS on that. Great. So now that we broke structure, this is our range. This is where I want to get my 50% retracement and buy it up. So step 5 is to find another point of interest below 50%. So let me get my GAM box or a fib from here to here. Here's my 50%, which lines up with this gap. So you can measure from wick, you can measure from body, doesn't really matter. It's generally the same area, right? This area right here. So okay, let me mark this up as another imbalance. Great. Now I'm going to remove my fib, remove my structure lines. Everything I have is pretty much good to go. I found my point of interest. Now it's time to put a risk to reward on it, guys. A chart is not a chart until you have defined an entry. In order to define an entry, you need risk to reward. Okay, so there's my risk to reward. Now first, let me find my stop loss below this candle. let me find my take profit. My take profit is going to be at equal high. So it's going to be here or here, etc. So let me just, there we go. Now I'm going to start here because I'm trying to hit take profit. And there's an imbalance here, which you could reject. So I want to be in and out the trade as soon as possible. If I have to move it up, I will. But let's just start here. So my stop loss is 1.2 pips. And my take profit 15, which gives me a 1 to 12. So personally, I only trade 1 to 10s. And a lot of people are like, oh, spread, da 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 da. When you're trading smart money, you don't really have to worry too much if your entries are perfectly precise. Well, I do have more room, and I do like to trade personally over a 2.5 or a 2 pip stop loss. So let's work with this area here. That kind of changes my risk to reward. And I'm going to fiddle this up to this take profit up here. So you guys can play around with it, but remember, you're doing this based off your stop loss. Don't move your take profit first and be like, oh, this is what I want. Be realistic, right? So right now I have a 9.3. I don't have to drag up here to make it a 10. I don't want to use the wick. I'm going to respect it as is. So that's what I had set. Now you can set a limit for this, right? You have your numbers right here, guys. People always ask me, if you limit or market execute, doesn't really matter. I got here at this time, so I was ready to execute. If I got there here at this time and I had a one-on-one call, I would set a limit. Getting in the trade doesn't really matter. The only thing with market execution, you may get some, like, not get your exact entry depending when you click your buttons. The only other difference is with limits, you may get some type of scenario that's going to tell you, you know what, it's not going to buy anymore. For example, this just for whatever reason just wicked up, with just random wicked up, news wicked all the way up here, and it started dropping, I wouldn't buy because this is probably the liquidity and the move would now be to the downside. So that's not something, if you set a limit and forget it, that you would be able to see, but that doesn't really matter. So yeah, this is the trade, and let's watch it play out. Take profit, smash. Also, guys, smart money, like when you really get into the markets of smart money, it's just so crazy how everything aligns. Like how it just sat on the imbalance zone. It just literally sat there. Crazy. Also, I do not personally go break even or trail stops early at all. I'll trail a stop to break. I'll just go break even once we either break this high, which wouldn't be here. It would be this area most likely. Or anywhere pretty much to my take profit. So I did have an alert over, actually I had an alert at this equal high. I remember I was on a call and the team seen it. I had an alert here, and that's when I went to break even. Okay? And sometimes I don't even go to break even. Sometimes I just reduce my my stop in half, because sometimes it goes right back down and all the way back up. So obviously I couldn't really reduce this in half. If it was a 10 pip stop loss, maybe, but that's how that trade went. So it's really important to get out in time as well, because we did have some news. Okay, this trailed for a little bit. I did trail a small partial. I trailed it all the way up into around here. I commented, I was like, guys, this is why you don't go break even. And then boom, the market came all the way back down to this area right here. So guys, this stuff is so crazy when you really have fun with it. Like, why, how, who? Like, point of interest to point of interest to point of interest to imbalance to structure. Crazy great stuff. Okay, so hope you guys had as much fun in this video and in this trade as I did. Please use the steps, screenshot the steps if you have to. I noticed a lot of people are watching my videos, and I love you guys for it, but I really want you to apply the concepts, right? A lot of people are looking at these smart money things, and they still have a million indicators, a million things that aren't relevant to smart money at all. So if you want to be, a smart money trader, please apply what I have here, and feel free to join my group chat and ask questions, but I will only answer questions if your charts are marked up to perfection. Okay, that's the end of today's video. Thank you guys so much for watching. Don't forget to comment, like, and subscribe, and I'll see you guys in the next video.